Starting with our first session, the topic is From Grams to App, Unlocking Wealth with Digital Gold. It's an absolute honor to inviting the speakers on stage. Please join me and let's give a huge round of applause for Mr. Gaurav Mathur, founder and CEO, Digital Gold India, SafeGold. Ms. Niharika Saigal, Head in App Category PhonePe. Ms. Surbhe Sharma, CEO, GeoFinance Platform and Service. Well, ladies and gentlemen, to moderate this session, I would like to invite Ms. Hena Mehta, co-founder, Basis Foundation. Let's give a huge round of applause. Looking forward for this first session. Over to you. Thank you so much.
Hi, everyone. Very, very good morning to everyone here. Very excited to be moderating this esteemed panel. We want to cover as much ground as possible. So we're going to try to focus on 5 or 6 key themes around demographics, user behavior when it comes to digital gold, trust and safety, monetization, and platform strategy, right? And it gives me a big honor to introduce our panelists. So we have Surbhe here with us, who is CEO of GeoFinance Platform, Niharika, who heads the in-app categories at PhonePe, and Gaurav, who's the founder and CEO of SafeGold. Just a couple of quick things, panelists. Let's try to keep our responses crisp and as candid as possible. So that'll give us an opportunity to cover all the very exciting topics that we have lined up. Cool. Without further ado, let's sort of dive right in. I think let's start with just demographics, right? So Niharika, we can start with you. So PhonePe, of course, sees massive scale, right? Who are your digital gold customers? Who are the unexpected ones? And any sort of surprising user stories you could share with us? And actually, before we dive into that, could we also do a quick intro on what is digital gold?
Sure. Sure. I'll take a stab at introducing digital gold. I think Gaurav here is best placed to answer that since he's been at the pioneer of launching digital gold with a lot of folks in India. So the way digital gold works is it's actually a misnomer. It's not digital gold. It's fractional purchase of gold, but which is backed by physical gold in entirety. And you can start as low as, say, rupees 10. So it's a perfect example of, say, a sachet product, a sachet savings instrument is at least the way we see it. There are no barriers to entry. You can start off as low as rupees 10. It's affordable. It's backed by 24 karat gold. Different enterprises might choose on the purity. Some do it at 99.9%, some do it at 99.5%. But in its entirety, it's actually backed by physical gold. The customers can make these purchases. The gold would typically be stored in a vault. And anytime a customer wants to sell, and there are different ways of exiting it as well. You can sell the gold. You can redeem it in the form of jewelry. Certain players actually have tie-ups with a lot of jewelers where you can convert it in the form of jewelry for end consumption purpose as well. So that's typically how digital gold's landscape is in India. Gaurav can add more to it.
Gaurav, anything to add?
I think that covers it well. I just reiterate the point that it's actual physical gold. And you can also earn interest in it. You can lease it out. You can use it in some cases as collateral for a loan. So everything you can do with physical gold, you can do digitally and faster, better, cheaper. And a few things you can do, like earning interest, you can do much easier, and it's tougher to do with physical.
Awesome. Okay, so Niharika, let's dive into the customers. Who are your typical customers? Who are the atypical ones? Would love to hear more about what you see on PhonePe.
Sure. So the customers that has how we have also been seeing have kind of gradually also changing. So last year's when we launched a sachet product or a sachet version of digital gold, which was daily savings, and what we essentially saw was that the demographic shifted to the 18 to 35. That's where bulk of our customers are now coming from. So it's indeed a transition. So far, gold's always been something which has been owned and consumed by folks in the range of 35 to maybe 55. The incentives being either consumption, incentives can be savings for a rainy day, or it could be actually towards a goal. So while the incentives kind of largely remain the same, there's been a shift to a younger population who are now actually finding gold to be a lot more appealing as a savings instrument versus what they were seeing earlier. And it's a shift from owning jewelry to say owning a fraction, as how we say it, like a fractional sort of a gold purchase. From a geographical perspective, it's largely similar, but we're also seeing that while earlier there was a lot more focus in the south, there's a movement and there's been a pickup in the northern regions as well. We do see people from different affluence buckets also picking this up, and it's actually a matter of having awareness. So we have had very interesting stories where we had daily wage earners coming up and saying that, hey, I started off with ₹10, I wanted to buy a gold ring for my mother. That's the end goal. We also have businessmen saving as much as ₹1,000 a day, saying, hey, this is my safety net for a rainy day. So we're actually seeing over the past 1 year, it becoming a lot more broad-based in terms of acceptance and usage as a savings instrument.
Awesome. Thank you for sharing that, Niharika. Very interesting to see a younger demographic looking at gold as a savings, a digital gold for their savings. Surbhe, as someone who's building a broader financial services platform as well, where do you see gold, digital gold fitting into the user journey, right? Is it sort of this entry product? Is it what's drawing people in? A way to build trust with users? Or just something like a daily savings habit to how Niharika was describing? What do you see at Geo?
Thanks, Hena, for the question. I think what's also is shifting in demographics is leading to this definition of what our entry point is now on the apps, right? So, for example, now 70% of the user base that is now buying digital gold on our platform is under 35 years. Now, that is the base who's transacting at about, say, 500 to 1,000 rupees. Earlier, this range was only associated with, say, for example, a UPI. So UPIs became like the entry gateway sort of for any apps to get a customer, then do a cross-sell, then move to second, third, fourth product, right? Now that is getting replaced with this digital gold as a product. If I have the liberty to take a gold in ₹10, I think that's my lowest hanging fruit to get a customer on board for any other product. And we've seen that. We've seen that on our platform. The day we launched digital gold, and we launched it, say, buy gold now in ₹10. People bought it, and we are seeing retention of those people across all the products that we have. The same segment, 40% being women there, have gone for, say, some kind of insurance products with us. Some have taken credit, some have simply gone and opened a bank account as a secondary bank. So I think, yeah, I think it's a massive shift, one, psychologically, of people understanding that it's actual gold. And then for us as a platform, I think it's becoming one of that erstwhile UPI entrant or a gateway that used to be there.
Gaurav, what are you seeing from a B2B or an ecosystem partner standpoint?
So I think it's definitely broadening. The one thing that works is, I think every Indian household, from the wealthiest to the sort of most mass market, they all own a bit of gold, or they all buy gold in some form, some way, shape or form. So obviously the pioneers were I'd say the large-scale payment platforms, the PhonePes and Paytms of the world are the people that started off the category, and those are the platforms that built it. But now you've got everyone from, wealth management firms to even the jewelers, selling digital gold, to some e-commerce platforms using it for rewards retention. You have FMCG players using it for, corporate rewards, Salesforce, dealer incentives. So it's really getting broad-based. And like I think we didn't realize it, and I'm sure many other people know it, but like many of these cement companies, for example, they used to send say, thousands of gold coins to their dealers all over the country. And that has, all the logistical challenges involved with sending gold coins, and people didn't collect it and this and that. Now, digitally you can do that. And all of that adds up to pretty sizable stuff. So as people start understanding that this is actual gold, it's not a, it's not a virtual asset, it's a real asset. I think everywhere gold was being used, it starts being used, and even more than that. So penetration spreading to, as I said, from cement companies to jewelers to wealth management all across the board.
Very interesting. Thanks for sharing that, Gaurav. And I think we've talked about behavior shifting, and I want to sort of just double click on that because want to talk about what is really driving this behavior shift, right? Is it trust, transparency, convenience? So Gaurav, maybe just building on what you were just talking about, what is the biggest trust building lever over here, right? Is it redemption options? Is it, I know we were talking about insurance, offline, purity? What is driving this just trust in this sort of fairly newer savings product?
So I think there's no one big thing that drives trust. It's a number of small things that have to add up. And honestly, the biggest thing is probably longevity. As people see it as a product being around for longer, people get delivery, they can sell it, they can redeem it. I think longevity is arguably boring, but it's the single biggest factor getting people to accept it. And then it's all the other basic things. Like we have a trustee, we have a custodian. If people go bust in the chain, the customer's gold is safe. It's a little bit complicated to understand, but as people understand that more and more, that helps a lot. And honestly, it's the various sort of I'd say large institutions understanding that they are the ones who dig into the details of how a trustee and a custodian works. The average customer is not going to do that, but they in turn simplify it and lend the brand, and they tell customers that you can trust this. So it's that derivative process of more and more brands pushing the product that gradually builds trust across the ecosystem.
Makes sense. Surbhe, Niharika, I would love to hear your thoughts as well. Is there a lot more awareness and education that's needed for digital gold to get users to actually trust it, or have you just seen, something different?
See, I think right now what we're seeing on our platform also, and when we did a lot of surveys when we were launching the product on the app, I think right now people are more intrigued or more interested to invest in it because it is a low ticket size and it is gold. And of course, the associated brand who's bringing it to the market matters because, say, for example, a PhonePe does it, Paytm does it, Jio does it. So there is some brand equity associated. But I think there's a strong gap where people don't really understand, even for that matter, even I 1 year ago before launching it, I didn't know it was such secured chain of events that happens, how secure that gold is. Even your whatever gram that you take in digital gold, it is basically a digital channel that you're opting for. It's not a digital gold, it's a physical, it's actually a solid gold. Every gram that you invest or take online digitally is backed by a physical gold in a vault, it's an audited vault, insured vault. There's a trustee in the chain, there's an insurance. So I think these are the steps which, if brought to light, I think there'll be more security around the subject. Rather than seeing it as a digital gold as a product, it'll be just as a channel then. It'll be just, instead of going to, say, a jeweler, you just go to App Store. It's the same phenomena, it's just how you buy it is changing, it's not what you're buying is changing.
Makes sense. Niharika, anything to add?
largely similar, although what we do see on the platform is that there's a natural affinity towards gold. And that's what the awareness is about, availability of the product rather than, the value chain. When we talk about it's backed by gold, and generally what we've seen is a lot of people are trying the product. So they would actually look at redemption early on. And when they feel that, it's actually working well is when they'll continue with invest or rather, savings in the product. So they continue in that journey altogether. And that's, I think, is also what is inspiring confidence when people see it themselves. And it's also having right now, because of, the rally that gold scene, there's a lot of halo effect around anything with gold. So given with gold prices rising, jewelry becomes a little bit of a longer term goal for people. This kind of has helped provide entry to a lot of people for an asset that kind of, has always been intrinsic to how Indians have been saving.
Makes sense. Okay, so I think the next theme I want to touch upon is just the economics and monetization of digital gold, right? So I think I read somewhere, maybe you all have the latest data here, India has $1.5 trillion of household gold. I also saw 2-point-something trillion, maybe Gaurav, you have it. Can digital platforms help unlock that value, right? So I think, Gaurav, you briefly touched on gold leasing, right? Could we again just double click on that? Do you see trends there? Is there a user mindset shift needed? How do we sort of monetize all this gold that's lying in our houses?
So I split that into two parts. So one is the existing gold, and again, there's no definitive data, but I think it's 2.6 or $2.8 trillion of total gold. But just coins and bars, and most of that is jewelry. 70% of that is jewelry, which is a consumer durable. It's like people wear it. So I don't think you can, realistically monetize a meaningful share of that because it's something that people use. They have emotional value to that. But if you just look at coins and bars, it's roughly $850, $900 billion that we've got. And to put it in context, that's more than our money supply, which is about $720, $730 billion. And money supply is all currency plus all bank deposits. So we've got more, I'd say, hard currency. I mean, gold is a universal hard currency in this country in the form of coins and bars sitting in people's lockers and cupboards. Then you actually have money supply. So it's a large opportunity which is worth tackling. And if you can bring that into the financial system, you can almost, build the whole economy all over again and a little bit more. So the scale of transformation possible is huge. It's obviously a challenging problem. They've had this gold monetization scheme for 7-8 years, which they recently shut down. And that has a whole set of challenges that we could spend a few days talking about. But some players on the digital side are now working to make that more convenient, where someone's got gold in their home. If you come and deposit it, you can actually earn interest on that. And I think that is the heart of it, that gold is fungible. You can convert it into effectively like money, and then you can earn interest on it. You can use it as collateral. There's a whole bunch of things. So yes, leasing has started. India is the first country in the world to have a retail gold leasing market. And there are now many other countries in the world that look to us to see how gold leasing works in India and how they can replicate it. But India has also got the largest stock of consumer-owned gold in the world. As a benchmark, China's stock of gold is maybe 7,000 tons. India's 30,000 tons. And US retail gold is maybe 3,000 tons. So it's the one market where we are by far the largest in the world by a factor of 4 or 5 or 6x. We've got the most innovation as a country around it. So if you can bring it in, and that's essentially revolving around creating a fungible, let's say, interest leasing market for gold where you can earn interest on it. Because until you can start reliably earning interest on your gold, you're not going to pull it out of your cupboard and give it to someone. But if you can start earning interest on it, and then you can use it to monetize it, that's when it works. It started happening. I think the biggest barrier is regulations. But regulations will come because this is undeniably good for the economy. It can be a massive booster. So it's a matter of time. It started. There's huge consumer interest where it's offered. There's like very strong demand for people to come with their gold and deposit it and earn some interest. And I think 2, 3, 4 years once it gets to scale, that's when regulators will also start paying attention to it, and it'll only build up from there. But it's probably the biggest hidden asset that the economy has and the country has, which once it's monetized will kind of actually transform the economy.
Got it. Can I lease my digital gold?
Yes, you can.
Okay.
Not all platforms, but certain cases you can, and you can get interest on it.
Got it. Cool. So just talking about monetization of gold, right? So Surbhe, could geofinance be that bridge between traditional household gold and new monetization methods like gold leasing? What would need to happen for that shift to start taking place, in your view?
It's a tricky question, Hena. See, firstly, there's no restriction that it's open. It's an open asset which a person can go to a platform whichever has the capability. You can go and lease, like Gaurav explained, right? But there's a lot of, I would say, an indirect risk that also comes in for the customer who's leasing it. And I think as long as that part, and this whole space is unregulated, we know that. And as long as that risk is something that you have the appetite for, that value chain is something that you can, stand against and say, okay, what if tomorrow that the party that you leased to defaulted or something, while it is covered and etc. etc. But how are you covering the user against it? Is there a regulation around it? Currently, no. But I think given that risk factor, I would say from our end, from Geo side, is something that we are not actively pursuing that subject. But if you say, should we have $1 trillion frozen capital sitting just like that, the answer would be no.
Got it. Niharika, anything to add there?
Largely similar to what Surbhe was alluding to. Just one facet, at least from our perspective. We see, while yes, obviously, regulations, having regulations would be important to basically lend legitimacy and also provide comfort to all the players in the value chain. What would also be important is the accumulation at an overall level, while is high, right? And when you look at it in terms of, say, 30,000 tons or 25,000 tons, the value is immense. At a user level, the accumulation also needs to grow to a certain level for it to be meaningful for the end user. That's when also I believe that, say, a leasing on something like digital gold would also become a little more to the front.
Interesting. And Niharika, at PhonePe, how do y'all look at sort of the monetization potential of digital gold? Is it a massive driver of LTV? Retention, what are you all seeing?
So typically what we look at is all of our products are centered around 4 stages of a customer's financial journey, which is send, spend, manage, grow. So gold fits in for us in the manage because it started off as a savings asset. The natural advantage or the rally of price that gold is currently seeing, and it's a hedge against inflation, so it kind of lends to the grow part of it. But not really controllable. So we do see it in that space. It is still, I would say, early days compared to some of our other products. We are seeing natural affinity to gold. It is picking up. So yes, it would be something that would help in retention for us, because the more number of products that a customer interacts, the higher the chances of retention are going to be.
Send, spend, manage, grow. I like that. Okay, you touched upon gold prices a bit, right, Niharika? So I want to just switch gears into that. Do PhonePe users buy more gold, digital gold at least, when prices dip? Are they agnostic? What patterns have we seen around just the price of gold affecting user behavior?
So I would say we have, depending upon the product, there is a set of users, like a hero product that we generally see is regular savings, and that's why I'm saying that, the shift that has happened is people are regularly saving in gold rather than for a ceremonial or for an event-based purpose. So that continues irrespective. That's largely agnostic of prices, what we have seen. However, any radical change in the price, whether it's an increase or a decrease, does activate a set of users, who would just want to make say, a lump sum sort of a purchase. So we do see those sort of trends that, do come in. But they're largely either event-based, it's either linked to, say, an Akshaya Tritiya or a Dhanteras, or, say, how the previous month was.
Got it. Gaurav, from a product and platform standpoint, how do you design for volatility, right? Price drops, surges, does that change engagement, volumes, those sort of things?
So just in terms of user behavior, I think similar to what Niharika said, it's volatility, both up and down, brings in a new set of users that will be, so you'll see a surge in volumes with any price volatility, up or down. Obviously, long-term up volatility is better off than long-term downside volatility, but we've not seen long-term downtrend in the last many years. In terms of designing the product, I don't think the product design changes that much in relation to sort of price movement. It's more in relation to user feedback in terms of what they want to do, and that's what drives product design more than anything else.
Surbhe, anything to add from how do gold prices affect user behavior?
I've not seen that trend as such. See, because the ticket is so low, the ticket size, that the people are now investing, 40% being women, 70% being under 35. So I think there's a mixed behavior. There's an investment behavior, there's a saving behavior. So if you're a saver or an investor at that ticket size, you'll end up averaging. And like Gaurav said, there's not been a downtrend at large in that speed in the last whatever years, right? So I don't think there's a change of behavior. It being still a sentimental, gold itself being a very sentimental commodity or asset, even today in India, I think the spikes that we see are more to do with festivals, Akshaya Tritiya, Dhanteras, Diwali, rather than gold prices fluctuating. Because the TG, I think, is very different. If it is a very large ticket size investor or somebody, he would pause. But that's not something we see on the digital apps right now.
Understood. Very interesting. So what I'm hearing is fairly agnostic to price based on kind of the average user behavior. So I would love to hear, and I know, Gaurav, you talked about this very interesting story that really stuck in my head when we we were discussing this panel. I'd just love to hear these user stories that may be slightly unexpected or something that may not have happened before sort of digital gold as a savings product really came about. So could we each just share maybe one that comes to mind? And Gaurav, I'm talking about the monk, that one.
Okay. Yeah, so we have many. I think for us, the most shocking was we had a sort of very high net worth individual from one of our distribution partners, who I think the highest single ticket size purchase we've seen has been 4 or 5 crores. And we never thought that someone will buy digital gold at that scale. So I think that has been because people just want, when they understand what this is, they said, I want the ability to get the physical gold with me. When they're buying it as a safe haven asset, they want the ability to, keep the gold bars with me, get delivery of my gold bars, and then go off anywhere, which is not possible in many other financial forms of investing in gold. And until you want the gold bars, it's kept safe with insurance and all. So I think that was surprising for us. And we've seen a bunch of, let's say, high net worth individuals who, once they understand the product, start buying in a few crores. So I'd say our average ticket size across whatever the 2-3 million transactions we do in a day, maybe 400, 500 rupees, but we do get a bunch of these 1 crore, 4 crore transactions. But the most interesting story was once we started leasing, we actually had a monk who lives in an ashram, and he's a wealthy gentleman, and he's kind of renounced most of his worldly possessions. But he had a couple of kilograms of gold that he had with him. I had no idea. In an ashram, they kind of live very simply, but they keep some, like a few kilograms of gold. He started leasing, and he showed up at one of our partner outlets with a kilogram of gold, actually 2 gold bars, 500 grams each, and he said they don't want to lease these out. And it was so unusual that our first reaction is there something wrong? Is there fraud? So we actually, showed up in person to say, we have to meet this person. And again, sitting in an ashram, this guy was reading about gold prices going up, and somewhere, just with Google, he started Googling what do I do with my gold? He'd never heard of us, he'd never heard of leasing, but just purely through a search engine, he figured out that the leasing is an option, I can do it physically. And he showed up. And I think that kind of highlighted to us the depth of gold ownership in India. All these statistics we have of these trillions of dollars of gold and all. It's just that it's deeply penetrated. You go to an ashram, you've left behind all your worldly belongings, but you've got this gold with you. And at some stage, then you decide that, okay, let me lease it out. And why they're driven to lease it out and earn that extra 4-5% of gold, that also is a bit of a mystery. But I think for them, it was one, it's safekeeping, and I earn a yield as opposed to spent on a locker. So I think that to us has been probably the most unique story we've heard.
Stories from your end?
I don't think I have a story as interesting as this one. But I think it's not a story, but when the recent experiences when we were launching, Akshaya Tritiya happened like a month ago or something. And we were launching, say, a random campaign, a brand campaign, where we were asking people that 10 rupees mein kya aata hai. Legit, about say 20-30 people came on our social media and they said somebody in the name of Geo is bluffing on streets, that you will get 10 rupees mein gold, so please take care of it. And they escalated, like it was a serious escalation, that somebody is actually representing Geo Finance and saying 10 rupees mein gold aata hai, you guys please take it very seriously. And we genuinely reported back to them saying, sir, aata hai, 10 rupees mein aata. And it was very interesting to hear that people couldn't believe that 10 rupees could buy you a gold. So I think it's, coming back to that question of awareness, I think it's just to do with that part, and I think India should kick off.
Niharika?
So, as I said, that, I actually have two stories at the end of the spectrum. So we were just doing a calling activity also, just to understand why are people looking at saving in gold. We've seen, a steady uptake that was kind of happening. And there was this person who started off with 10 rupees and in the next 6 months had moved to, say, 60 rupees a day. And, steadily increasing what they're saving every day. And if you look at it cumulatively, it amounts to a significant amount, while 60 rupees doesn't sound, or 10 rupees doesn't sound too big to begin with. So this person said that I'm actually looking to buy a ring for my parents. I think it was 30th or 40th anniversary. And the way I think of it is that if I start doing it, in smaller segments, I'm more likely to reach that goal versus, rather than thinking about how do I do it. I also know that I can actually redeem it, so I have different options that they can do and look about it. And so that, okay, how did you figure all of this out? So that YouTube Reels. I'm like, okay, that's an interesting place to be. So there's a lot of network effect that's happening around there where, people are talking about. India inherently has had a high saving percentage to GDP, which has kind of now been declining, over a period of time, while, say, spends or savings in physical assets has still been kind of holding steady. So we are actually seeing, in that line that where people are saying that I do want to save. Maybe till now I don't have an instrument to save it. Now it's maybe giving me access to, and because it's in the form of gold and I actually can redeem it in the form of gold, better, because for some it's actually towards a goal. There was another one, we were very surprised to see that these several thousands of people have actually set up greater than 1,000 a sip a day. And we were interested in knowing that, what's kind of helping there. And it turns out, we called a couple of folks just to understand that, what is it. And mostly around, businessmen basically saying that this is my safety net. So I'm just like, how people take, say, maybe a daily loan to manage their working capital, this guy's doing the reverse. He's like, I'm creating a daily safety net for myself to see that, how it lands up at. He also understood the way the metal works. So he says that, hey, I'm also trying to capitalize on the trajectory that it's saying, and then I'll be able to utilize it towards wherever my business needs it, maybe in a couple of months.
Super interesting. Thank you for sharing those stories. We have, so audience, please keep, we'll probably have time for 2 to 3 questions. So if you have anything in mind, please make a note of it. But I'm coming to the final part of this panel, which is the lightning round, which is what I've been looking forward to all week. Yeah, I have a couple of questions for each of you. Just sort of, let's try to keep it fun. And they're not hard questions, I promise. So Niharika, let's start with you. What's one myth about digital gold you want to bust?
It's not digital.
Okay, awesome. So audience, just by show of hands, do you understand what digital gold is? Yes? Raise your hands. Okay, great. Because I was talking to a colleague this morning, they were like, yeah, this is gold ETFs, right? And it's obviously not that. So just want to make sure that as a savings product, as an asset class, we're well aware. So okay, but it's not digital. Awesome. Gaurav, gold prices are up 10%. Do you save more, less, pause? What do users do? What's your gut call?
Save more. As long as Trump is in power, keep saving more.
Awesome. Surbhe, if you had to kill one feature from digital gold apps today, what would it be?
Yeah, that's the toughest one.
Well, yours aren't done yet. Sorry.
See, if I talk from Geo Finance's side, I would say don't kill it. But if I was a user, I think the onboarding is something that a person who just wants to put in money, as simple as just crediting one account, debiting one account and crediting the wallet. I think the onboarding is something that as a user would want it to be a more seamless. Right now it's a KYC heavy, which is also not very bad if I look from a platform perspective. But I think from a user perspective, it would just mean I have money, take it, I need gold.
Interesting. Sorry, I know this was supposed to be a lightning round, but I'm actually curious. So if I want to start buying digital gold, is the KYC process as much like as a demat account? Like how do I start?
Ask any 3 of us, it's not bad.
Okay.
It's light, it's just your Aadhaar verification, OTP, etc. But I think from a user standpoint, it's also something that came up in one of the surveys where people were dropping off at that stage. And we contacted them back and said, and see, a lot of percentage now, which is also surprisingly and happily surprised, is investing is tier 2, tier 3 cities. And not just prime cities, right? So these tier 3, I personally spoke to a lady, she's like, mujhe ye OTP mat mango, mujhe sona chahiye. Right, so that's a simple use case where maybe you can come up with some alternate way of doing a KYC. But I think that's one step, but it's not a cumbersome, it's a very simple onboarding.
Okay, thank you for sharing that. Gaurav, if you had to build trust in digital gold with just one lever, what would it be? Brand, UX, redemption, anything else?
Regulation.
Okay, I love it. All right.
That's Gaurav's favorite.
Awesome. Surbhe, would you ever use digital gold as your emergency fund?
If I'm very financially literate, no. But,
okay.
But it can be a percentage of your emergency funds.
Okay.
Given that how secure the trajectory is, it's not as volatile as your markets, etc. I think it should be a part of your emergency funds as a percentage.
Okay, awesome. And last question, Niharika, if digital gold had a mascot, what would it be? Like a squirrel, someone who's saving a little bit every day, a vault? I don't know. What would be a mascot for digital gold?
I mean, the way I see it right now, and the low savings that are coming in, you all guys are familiar with that burnie of toffee that the retailer keeps to hand over change. In my mind, it just could be that.
Awesome. Love it. Love all the answers. Very, very creative. Thank you for being sports. And yeah, we have maybe 3 minutes left. Any questions from the audience? Go ahead. That's the mic there.
Hey guys, lovely panel, well spoken. My name is Anand. I run a small fintech startup. So most financial assets have gone digital. Now gold has become digital. what are one or two other assets that you'd like to see go digital, where somebody can buy that asset for as little as $10? What beyond gold?
I guess other jurisdictions, real estate is the most common tokenized, fractionalized asset. As in, if you take a real world asset, I mean, precious metals, you have gold, you can add silver, platinum, all of that. But real estate is the most common one across the world. Here, regulations sort of don't permit that. But real estate is probably the most
Yeah,
common.
I think the question, I can only answer the first part, which is which can go digital. It's again real estate and say the auto side of our industry, right? A lot of our records itself are not digitized. The SROs are not 100% digitized records there. If you today want to go and get a home loan, for example, your records have to be manually presented, unlike any global countries like UK and all, where you have it at fingertips. But I think that can go digital. Go as low as 10 rupees. I think that's a challenge.
So I run a platform called AllDRX, where you can buy digital real estate for as little as $10 a day. We should talk.
Okay, that's a combined answer there.
Great. Yeah, we have time for maybe 2 more questions. Sure, go ahead.
Hi, my name is Clemenston Verghese. I run a fintech platform called Dwara Money. We cater to the gig and the blue-collar segment of India. My question is to Gaurav. Gaurav, in terms of gold as an asset class, you know, it's super affluent, means it's something everyone desires. Unlocking of it in terms of taking loan against the digital gold is still it's unclear. A lot of NBFCs, banks are not wanting to get into that space because of that very gray area there. So how do you see that unlocking happening? Because a lot of customers are investing in gold. They would want instant credit facility on that gold. That would actually provide them instant credit facility instead of converting that into making charges and other things. What do you see there?
So there are I know of 8 banks and NBFCs that have put a proposal to the RBI saying they want to lend against digital gold. They've not heard back. As soon as they hear back, that will unlock. Depending on what the answer is, that will lock or unlock that feature.
Okay, I think we're out of time, unfortunately. So one more? Okay. Last question, it better be good.
You can give him a chance.
Can we have a woman ask a question? Sorry.
Anybody would like to ask?
Ladies, come on. All right.
My name is Rohit. I'm a founder of a consumer fintech called Fini. And we are into the space of wealth. So while, you know, the positioning of digital gold in sachet and with a very small amount, and there is very little about, it's more about, like you were saying, it's ceremonial and stuff like that. When does it really become a wealth asset? Because there's very little talk around CAGRs, what's the yield, and traditionally you have FDs which have sort of given a lot of access, but there is that institution of banks behind it. Then you have you know, the financial asset classes where you have exchanges, its interoperability is very, very good. In gold, while there is a lot of transaction and hoo-ha around it, but is there any internal talks around really making it as a wealth asset class? Because the people, like you said, the people who are investing in the tune of 4-5 crores and bigger, today these platforms don't really attract enough because the positioning is all 10 rupees, 15 rupees, and it is not substantial enough for people to go there.
Okay, I think what you're alluding to is that is there anyone looking at regulating the space? That's the question?
No, I was talking about it being really a wealth creation. An asset class which could really be considered as a part of your asset allocation while people do gold, But the positioning today is 10 rupees, 15 rupees. It doesn't become substantial enough. The 10 rupees you were talking about or the 50 rupees, even at a compounding level, it's not, the magnitude is very low. 10 rupees is 3650 a year. You make it 50, is 15,000 a year. 20 years, the base amount itself is 3 lakhs. That's not going to change massively in someone's asset allocation as wealth. So the people who are really serious about who are investing in financial institutions or even of FD also, like you were saying, Surbhe, there's not a, if you're a financial literate person, you would go lesser there. But gold doesn't attract from that perspective. So is there any positioning change or where, really talking about yield is the first thing which comes to a astute investor or a normal investor. But in gold, it's all ceremonial. You can get it at 20 rupees, all these campaigns. They attract a lot. And therefore, it's not a surprise that people under 35 who have not yet reached at that, earnings level, etc., are getting attracted. But the serious investors are still away.
So if you look at it, increasingly the way how stock markets are performing, people are being said that, hey, maybe park 10 to 20% of your investment portfolio or your savings portfolio in gold. There are two parts to it. There's a savings mindset. So there are people who are just starting off the saving journey, and then there are people who have excess and moved on to investment. I think you're talking about the latter. For them, there are different products that are available. Would digital gold be the right product for them if you're looking at, say, at increasing your portfolio? May not be the case, right? Largely what this caters to is people who are looking to save, who are looking towards consumption. There are other products that are available in the same asset class that are maybe more suited to a person who's looking to grow their portfolio, say multifold, or looking to just diversify. But could that answer be digital gold? May not really be the case.
So if I can just follow up with Gaurav, but Gaurav, you said that people who understand investments, there are transactions which are happening of 1-2 crores. So, and this one seems to be slightly off of that remark. Could you add on to this?
So okay, I'd say there are two factors that one should look at. One is, should you allocate to gold? I think now if gold prices continue at the current level for another 1 or 2 years, because it's just now, if you start looking at 5-year, 10-year, 15-year histories, now gold CAGRs are outperforming the stock market as of today. But that's because we've had this extreme bull run. No one knows what will happen. But if it continues for another 1, 2, 3, 4 years, even at more modest levels, then when people start looking at 5, 10, 15-year histories, they'll start seeing gold as outperforming equities or at par with equities, lower volatility. And you'll get a natural higher asset allocation shift into gold. But that will happen with time. And it started happening, but if it continues, so I think that's one part of it. Then to Niharika's point is, given that increased asset allocation into gold, what is the best method to do it? You could do an ETF, you could buy physical, you could buy digital, all of that other stuff, right? The class of people that then start buying digital gold is, and I don't know if it's 30% of the market or 50 or 10%, that we still have to figure out. But there is a class of people that buys gold and says that I want to have the ability to get physical possession. That is an important part of their sentiment around buying gold. Even though it's driven by an asset allocation decision, the ability to get physical possession is an important driver. Those are the guys who buy digital gold because they know they can get physical whenever they want. The other things like ETFs and all, it's not easy or you cannot get possession. So now what percentage of the market wants that in the HNI segment is, we don't know, but it's certainly at least 10-20%. So I think that's the segment one can target. And the final thing is that many of them also want to lease their gold. This is the only product that lets you earn a yield. So if you package it along with the fact that you can get physical delivery, you can lease it out, and they're sophisticated enough to understand the risks, then that's when it starts working for wealth.
Thank you. Okay, thank you. I think we're out of time now. Thank you so much to the panelists for sharing your thoughts and views and insights so candidly. And I hope folks in the audience took away at least 1 or 2 interesting takeaways about digital gold and how user behaviors are evolving. So thank you, everyone, and have a great rest of the day.